Hi, thanks for joining the video. Today I want to talk about Korea. And I want to talk about Korea in a big picture perspective. And the thing that it reminds me of is when I first started my career back in the late 1990s, a friend of mine, Robert, who hopefully is watching the video at some point and might point this out, he wrote a really good report looking at Japan. And that was, as I remember, titled The 3Ds. And the 3Ds in Japan were demographics, debt, and deflation. Now, if you think about Korea today, Korea has also the 3Ds. Not quite the same, but there's some similarities. And so one of them is demographics, another them is debt, and the third one, which is a bit different, it doesn't have the deflation, but what it does have is a development model that's very much challenged by the rise of China. Now, why think about these three things? Partly because it's something which the Bank of Korea has been focusing on in a lot of the research that it's been doing, but also because as much as these are big structural issues, they also have very much relevance for how we should be thinking about markets, where interest rates might go in Korea, where equities might be traveling and so on. So these are very important issues to understand the economy of Korea and therefore to understand where markets might go from here. And so that's what I want to focus on today, this idea that Korea has 3Ds and to go through some of those. So to begin with, I want to start with this. It's quite a long quote, but I think it's worth saying, partly because it reminds me of myself, but also because this is kind of one of the things that the Bank of Korea has been highlighting in its research. And it's this idea that, Korea's economic growth model really does face big structural challenges at the moment. So if you give me a moment, I'll just read this quote. So much like Korean society, Korea's economy has passed its high growth phase and entered its middle age. Just as middle-aged individuals, no longer in peak physical condition, are often forced into relentless competition, Korea's economy, despite having achieved significant growth, now finds itself at a critical crossroads amid rapid changes in both domestic and global conditions. The global trade environment, which had long served as a tailwind for growth, has now turned into a headwind, and the internal engines that once powered strong expansion are gradually weakening. Like a middle-aged runner returning to the track after a long hiatus, Korea's economy now stands at a pivotal juncture, compelled to navigate internal and external challenges and choose a new path forward. So again, middle age, right? That feels a lot like me, so kind of makes me feel tired just reading it. But the reason for highlighting it, again, this is something that's coming from the central bank in Korea. This is a credible, important institution who does a lot of good work about thinking about Korea's economy. So this isn't some, bank trying to make a story. This is something which is much more focused on what policymakers are thinking and what policymakers should be doing about the economy. So understanding these, so I think if it's relevant for the Bank of Korea, it should be relevant for us as economists and investors thinking about Korea as well. And really, so the Bank of Korea has done 3 different reports over the course of the last, in English, they've appeared over the course of the last 6 months or so. In Korean, I think they came out a bit earlier than that. But the 3 things really are kind of looking at the issues that these 3Ds that Korea is facing. The first was on the export sector, and that was back in 2024. So there was a long report thinking about the challenges to the export sector in Korea. One of the reasons for doing that is because Korea has been facing both competition from China at home. And so, if you look, for example, at this chart, which shows the trade surplus between Korea and China over the course of the last 20 years or so, there was a big trade surplus in 2015 that had turned into a deficit by the time we got to 2022 or 2023. So a big change, if you like, in Korea's relative position compared with China. So that report came out late last year. Another report earlier this year was called Super Aging. Obviously, that was about demographics. And a third one was about, more recently, the comparison what Korea can learn from Japan. Now, there's overlapping issues in all of those 3 things, but one of them that really stands out is this idea of super aging and demographics. Again, this is important to be thinking about for Korea. It's also important to be thinking about for the whole region, because as much as these things are particularly pronounced, the trends are particularly strong in Korea. It's the same in China, it's the same in Japan, it's the same in Taiwan, right? All these economies are facing the same issue with demographics and the aging of the populations. And in terms of this aging, there's sort of statistics that stand out in Korea. So one is there is a definition of an aged society, which is when the percentage of the population aged over 60, when 14% of the population becomes over the age of 65. Korea reached that point in 2018. There's another definition of aging, which is super aging, which is when 20% of the population is over the age of 65. So Korea moved from aged in 2018 to super aged in 2024, a process of just, a few years or so. And that is apparently the fastest of any OECD country. So this is putting it in perspective that we all sort of historically have thought about demographics in terms of Japan, and Japan as being the leader in this process, or a pioneer, not in a good sense, of these demographic changes that the rest of the world is seeing. But if you want to focus on an economy where it's happening quickly, it's really Korea. And actually, you can take these statistics further. And so now the population of the proportion of the population aged over 65, based on UN definitions, is going to get to 40% by the time we get to 2045. And by that time, the proportion of people aged over 65 in Korea will be greater than the proportion of people aged over 65 in Japan. So the aging process is happening, but it's happening much more quickly in Korea than it did in Japan. And so the Bank of Korea talks about this as saying aging is happening at an exceedingly rapid rate in Korea compared with other economies. And you can see that again in what's happening with the population. So the population has now peaked and is falling, and also the working age population has also peaked and is now falling. So the demographic changes that are happening are now becoming increasingly relevant for the economy because they're happening at quite a rapid pace. Now, when we think about aging, I think often aging is sort of in terms of one process, and that process because of aging, right? So aging is people living longer. It's longevity increasing. And that certainly is something that's happening across Asia. And is something I think we should be welcomed. And this is because healthcare facilities are improving, countries are becoming richer, the ability to care for elderly people is getting better. All of these things are beneficial. And it means, therefore, that, people in Asia have some of the longest lives of people in the world. I think this is something to be celebrated, right? It's a positive development. It has economic consequences, but it's a positive development. But that's not the only that's not the only demographic change that's happening. Because obviously you think about it, if there's an increase in the number of people getting older, then the population should be increasing, not falling. If people are staying alive for longer, that should mean the number of people in their population is rising. Now, obviously, that's not happening. Populations across the region are now falling. And so the other thing that's going on is falls in fertility rates. That's the other thing that's happening. And so there's a fall in the number of children that are being born to women across the population. And that is the thing that means the population is falling. And why is that significant? Because in Korea, that is the predominant theme. There is an increasing longevity. Again, that's important and it's welcome. But the much bigger change has been in fertility. And that can be shown in two ways. So first of all, if you look at this chart, this is looking at fertility rates across the region. And the obvious thing is that Korea is much lower than elsewhere. So the Korean fertility rate was now just 0.7 based on UN data. The replacement ratio, so the ratio that's thought of as keeping the population stable, is 2.1. So Korea is much lower than that. It's also lower than Japan. It's lower than China. It's really kind of stands out in the region as being something of an exception, even in a region where fertility rates, are generally falling. The other thing, again, is from the BOK and their research on this. And they argue that 70% of the change in the population over the course of the next 50 years or so can be explained by changes in fertility. Only 30% is due to longevity. And so when you think about demographics and demographics in the region, demographics in Korea, it's not really precise to say that the population is aging. The real dynamic that's happening is this fall in fertility. And I know it's sort of a bit of a pedantic point that maybe, people want to, you still end up with the situation where the proportion of people aged over 65 rises. But I think it's important to remember that this is because in Korea, the fertility rate is falling. That's the most important dynamic. And why is that important? Because that's a fall in the number of people. It's a fall in the working population. And so it does have much more meaningful economic consequences in the short term. So what's the consequences of this? Both the fall in fertility, the fall in the population, and the increase in the number of working people. Now, there's more and more research about this from, again, the Bank of Korea, the Bank of Japan. These are important issues. And so policymakers tend to look at things. But there's not really a strong consensus, I think, in terms of what it might mean for inflation. But where there is a strong consensus in what it means for both potential growth and what it means for interest rates. And so if you look at Korea, the Bank of Korea already thinks the potential growth, the rate at which the economy can grow without causing inflation, is already only 2%. So a very modest rate of growth, even though Korea remains, for example, a poorer economy than the US, for example. The other thing it tends to happen, and they think that, the potential growth rate in Korea will fall over the course of the next 20 years or so and reach around 1% by, in 20 years' time. So to put that in perspective, the Bank of Japan thinks the potential growth rate in Japan right now is between, say, 0.5 and 1% or thereabouts. And so this is a very low rate of growth, which Korea is heading towards. As that happens, the real interest rate in Korea is also expected to fall. And that comes along with its decline in the potential growth rate. And so this has, serious economic implications for the economy. But the demographic stuff, which is very similar to Japan, means that both potential growth and real interest rates will move in the same direction. And so thinking about interest rates from a longer term perspective, it would seem likely that it seemed most likely that interest rates in Korea, from a structural perspective, have more room to fall than they do to rise. And that should be particularly important for longer term interest rates in Korea. So that's one aspect of these of the structural changes, the Ds that Korea faces. The second D is about debt. Now, again, if we think about Japan's experience, debt was also important in Japan because as you went through the process of the 1980s, there was a big increase in debt as a percentage of GDP, which rose from about 100%, 160% of GDP or thereabouts in the mid-1980s to about 220% by the time we got to the mid-1990s. And the reason that happened was because companies borrowed a kind of money during the bubble, and then asset prices fall and the economy stopped growing. So there was both a change in the denominator and a change in the numerator, and as a result, debt went up. Now, if you think about Korea today, Korea in terms of private sector debt, and I, to admit it, I hadn't realized this until I read this recent BOK report. I hadn't kind of figured on this comparison. But private sector debt in Korea today is very similar to the peak that it reached in Japan sort of during this rapid rate of growth previously. So that debt level is above 200% of GDP for the private sector. It is a very high rate. The thing that is characteristic of Korea is that in Japan, it was much more focused on the corporate sector. So the corporate sector went on this borrowing binge during the bubble and investing in real estate and so on. What's happening in Japan is there's much more focus on the household sector. And overall, the household sector accounts for 45% of the total debt, compared with 32%, the statistics the Bank of Korea uses in Japan. So it's a very different perspective in terms of debt compared with what we see in other economies. Now, why does this matter? It matters for a couple of reasons. So one, because the household sector is largely borrowing in order to buy property. So again, a bit like, Japan in the 1980s, this is very much real estate, even though it's held by the household sector, not the corporate sector. It's very much related to what's happening with the housing prices. So that's one significant aspect of this. Another aspect of it is it means that because borrowing is going to it's household borrowing to buy property, that is a diversion of money which can't then be used for the innovation, which because of the challenge that's coming from China, and we'll talk about that in a bit more depth in a minute, but that money then isn't available to finance the increase in investment in technology and so on that will allow Korea to be able to compete more effectively with the other rising economies in the world. So this is a real issue that the economy faces, not just because of the issue of financial stability, but also because of the issue of how Korea is positioned relative to other economies going forward. So this is like a structural thing to be thinking about, but it's also very relevant for the short term in Korea because every time that the housing market rebounds, it means that household debt is rising from a very high level, and therefore it becomes very relevant for what the Bank of Korea does with interest rates in the short term. And so if we think about what's happening with the Bank of Korea this year, since 2024, the BOK didn't cut interest rates in the first half of 2024, in large part because the property market was rebounding. As macroprudential measures were used and the property market started to slow in the second half of 2024, the Bank of Korea cut rates. Since interest rates have been cut, property market started to rebound very strongly again during the course of 2025. And so the debate around the BOK once again is, does the Bank of Korea have the ability to cut interest rates when the housing market is rebounding? Because one of the big fears that the Bank of Korea has is that there is a trade-off between supporting the economy on the one hand and inflating financial excesses on the other. And this debt burden that Korea has, given, household debt and private sector debt being more than 200% of GDP, this is a burden which the Bank of Japan and the Bank of Korea thinks that should be controlled. And so this is an important issue, both, structurally for the economy, but also see in terms of policy where the Bank of Korea can move interest rates. So moving on to that third part of this financing issue and how the diversion of resources, and this is very much sort of the debate you see in China as well, the diversion of resources towards the property market and sort of unproductive sectors to the detriment of some of the more productive areas of the economy. So that leads to the third D that Korea faces. So the idea that the development model that Korea has faces a big challenge from China. And you can look at that sort of in various ways. So I talked earlier about the export, the trade deficit that Korea started to run with China. You can also look at it in terms of market share that Korea has in the rest of the world compared with China. So Korea's done actually quite well in the EU and the US. But you look at a lot of the developing world, Korea's market share has been falling over the course of the last few years. China's market share has been rising. I mentioned earlier that at the end of 2024, the Bank of Korea wrote a report looking at the challenges that the export sector faced. That looked at 3 specific issues, but really when you read the report, it's very difficult to get away from the sense that it's really all about China. And the reason for that is because China, as we've talked about in previous videos, that you can see a lot of some of the visualizations that we have on the website, it's very clear that China is becoming a big exporter of capital goods and exporter of autos in particular. And if you think about the structure of Korea's industry, it is about exporting capital goods such as ships, autos, and chips. All of these things are areas which China is moving into. And compared to somewhere like Taiwan, where TSMC so far, and the foundry model that TSMC has, that is something that in China hasn't managed to replicate so far. But in terms of memory, and obviously memory is the area of the chip market that the Korean companies focused on, that is an area where China has managed to make much bigger market share gains. And so this is the sort of existential threat that Korea faces. The growth model that Korea has had that's delivered the economy to where it is today has been very much focused on exporting capital goods to the rest of the world. That model is now being threatened because of the very obvious rise in competitiveness that China is managing to see. And that is something that is causing a big concern for the BOK. And so if you think about some of the things that the BOK says about this, so for example, China's role in Korea's exports has shifted from being a complementary partner to being a competitor. In traditional industries like refining, chemicals, and steel, as well as in advanced industries like semiconductors and the new 3 industries, China is investing massively and leveraging improved technology to enhance its global influence. So again, this isn't investment bad. This isn't a journalist talking about this. This is a central bank of Korea making this kind of analysis. So this is something which I think shows the seriousness of the issue that Korea is currently facing. So those are the 3 Ds that Korea has. The 3 Ds in Japan were debt deflation, and demographics. The 3 Ds in Korea are demographics, debt, and this development model. Now, what does that mean? So one thing about it is these are structural issues, right? This isn't something that can be resolved by interest rates being cut by 25 basis points or by the government giving out fiscal handouts to households as it has done over the course of the last few months in Korea. These are deep-seated structural issues. And if you go back and look through the BOK reports, it does give a lot of recommendations of the sort of things that Korea should now be doing. And so those things include providing better childcare facilities, because that will allow women more easier access to the workforce, which is increasing the labor force even as the population declines. It includes things like macroprudential measures in the housing market to control some of the debt issues that Korea has. It includes promoting investment in some of the strategic industries and the high-tech industries that Korea needs to promote to be able to compete with China. These are all understandable, laudable aims. But the other thing about all of these things is both there's a lot of them, a lot of change is needed, and these are structural reforms. These are difficult things to achieve. And so actually the Bank of Korea gives this example of the fertility rate. So the fertility rate, I forget the exact date, but the fertility rate dropped below a replacement rate of 2.1% a few decades ago. But it took until much more recently before the government started to take any real action to try to tackle this. So the point about this is that these issues are now in play for quite a long time. It might be that the government can now come up with big structural reforms. There's a new government in Korea since early June. It might be very effective in terms of tackling some of these problems head on and making more radical decisions, which will start to address some of these structural challenges that Korea has. But the point about them are they are very difficult. Other governments haven't managed to do them. It seems unlikely that they get resolved, actually, over the course of the next few years. And if that's the case, then it seems much more likely that there's still downside risk for the structural growth trajectory in Korea and therefore interest rates in Korea. Now, if you think about that, what that means to markets. And so if you think about sort of what the most powerful dynamic is for, in terms of investing, it's probably one where both the structure and the cycle are coinciding. And you think about that in Korea, say 3 months ago, that structure and cycle for the Korean story were indeed aligned. So before the election in June, the economy was soaring very rapidly. There was the tariff shock. There was the political uncertainty at home, all weighing on the domestic cycle at the same time as you have these very negative structural issues coming forward. Where we are 3 months later is the cycle is starting to look a bit better. So consumer sentiment has picked up very strongly over the course of the last couple of months. Business sentiment, it looks like it might begin to stabilize. There's maybe some green shoots in the labor market even beginning to appear. And so compared with 3 months ago, the cycle starts to look a bit better. To my mind, and this is partly because of reading all of this BOK research, I've become much more concerned, or the structure issues become much more prominent in my mind about how I think about Korea's economy. So it's not quite as neatly aligned in terms of, for example, easy to call that the BOK needs to cut interest rates much more, as was the case 3 months ago. But I'm still sort of feel much more negative about the outlook for Korea's economy. There's always a cycle around the structure, but I think it's much more reasonable to be thinking in terms of actually the trajectory is still interest rates going lower, inflation coming down, and real growth slowing as important structural themes for Korea's economy from here. Now, again, I've talked about some of these things relative to BOK research, and if on the BOK website to look at those reports, I would recommend them. They're interesting, they're well written, there's a lot of good information in them. Also, though, you could look at our website, eastasiaecon.com. Now, I think of this as a platform for allowing the analysis, charting, data, visualizations about how to think about the big Asian economies. What I'm trying to do is thinking about the cycles, and therefore to think about central banks and interest rates and equities and so on. But I'm also very interested in how these economies work and trying to think about some of these structural issues. And that's a lot of the analysis that I'm doing based on that infrastructure of data that we built. So please, if you're interested, go to eastasiaecon.com. You can check out some of the charts and some of the visualizations, and you'll also look in some of the subscription choices you have if you're interested in following this data on a more timely basis. Thanks very much for watching the video.